This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. Going to give you a stock market update for Friday morning. So, had another holiday. We've had 3 of those over the past few weeks. Want to stay focused on the conditions that are taking place now that we've flipped over into 2025. While we haven't made any real decision yet in terms of direction, I think there's some things we can look at that will help us determine where we should be leaning. All right, let's go ahead and get into that. Now, if you want to learn more about some of these techniques, especially using multiple time frame trading, using MACD and ADX, I would suggest starting with the book. It's at rabilstockresearch.com/book. And also, if you would like this content, please hit the like button and also subscribe. Okay, as always, like to start at the bottom here. Sentiment keeps dropping. The number of bulls continues to diminish. Number of bears actually going up a little bit. The spread, the difference between the bulls and the bears has dropped down to 33%. Now, the reality is that we were at a really, when we get up into this region up in here, and the number is high, up in the mid to high 40s, it's a pretty big negative. I don't think we've resolved it yet, okay? I don't know that we've worked it off. Normally, when you're in a bull market, you've got to work this down into the 20s, low 20s, something like that to actually work off this condition. But I'm going to move it to neutral now because it's really sort of like overbought, oversold, right? It's worked its way back into a neutral position. So both of these now are in the neutral camp. Volatility still remains high on both the weekly and the daily. Now, the trends are interesting, to say the least, trend in the momentum. Both the monthly and the weekly trends are still positive. The daily is full-fledged negative now. And then we have a split in the momentum. Monthly is still positive, weekly is neutral, and daily is negative. All right, let's go ahead and go through these now. And one of the things that just kind of jumps off the screen to me, number one, look at the jump in the volatility over the last 2 to 3 weeks. All of this movement, this increase in movement is dramatically different than what we were seeing here through the move to the upside. So this, to me, this is signs of potential distribution, but it's also just a sign to be aware that the risk levels are increasing. When this line is going up, that means risk is increasing in the marketplace. And the main thing that it does, all right, is that it creates a much more difficult environment for trading. Doesn't mean the market has to go down. But if we've got higher volatility, it means the likelihood of putting a stop in and making it through, owning a trade that doesn't get stopped out, it gets much more difficult. All right, so you want to make that you want to make sure you're aware of that. All right, before I move in, I do want to just talk real briefly about the weekly as well. So we had this downtrend for all of 2023 and then the early part of 24, and then this shifted. This blue line is the 18 MA of the average true range, and it has been rising pretty much this whole year. Now, it started to drift off a little bit, but it has not flipped enough to refer to this as declining yet, all right, the way I calculate it out. So it's still considered flat. The moving average is back above either way. Even though we've worked off the overbought condition, we still have a higher volatility condition, and that means that, again, risk levels are elevated. If you're playing stocks that are going to mimic the market or have a high correlation to the market, there's much higher risk. We can also see when we look at this chart, so this is the 18-week and here's the 18-month. You see the separation here? So if we break the 18-week, I think there's some risk in this market. Now, initially, I think there's some support here at 5,600, but if it turns into something a little bit more meaningful, we can see how much room there is for this thing to drop, which would be the next big resistance support area, all right? So want to keep that in mind. Now, what I want to point out is we failed at the 18-day twice now, all right? And we've held the 18-week twice now. In fact, now we've tried to hold it a third time. This doesn't qualify as holding it for sure, just had a little bounce, but we're caught in between these two lines. So I think the next meaningful move is going to be either a move back up through this prior peak, which is around 600, which would say, pretty good chance we could go to a new high if that happens, or we come back through this bottom, this low here, which would confirm sort of a break of the 18-week line. and it would actually take out these two lows here. And I think if we do that, then we've got a more significant sign that we're breaking this 18-week. That's the same as this line here. And the risk starts to increase. So we want to just watch this. Let the market determine this. You don't have to guess. All right. Now I'm going to show you a few things that are taking place when we look at market trends in momentum that I think can really help us determine what is taking place here. So when we look at the monthly chart, it's actually fine. I mean, the monthly is extended away from the 18-month line, right? I mean, we're too far from this 18-month, and we've been pretty far away. We didn't test the 18-month for all of 2024, and it can go on a little bit longer than a year. In most cases, when we flip over into a new year is when you want to be looking for signs of reversal. We've already started to see a little bit of that. But this is sort of like just kind of giving you a early warning sign. What the weekly is showing us is the fact that the momentum has died off. It's not necessarily a timing tool, all right? But it is a sign that the momentum is exhausted, and this last leg is a move to the upside without a lot of strength behind it, all right? Now, what we need to confirm that is a break of the 18-week. Now, what I just pointed out is that if we take out this high or this high, that we have sort of we have a new direction, at least for the short to intermediate term. If we take out this low, it sort of confirms what we're seeing here. If we take out this high, it's not really being confirmed by what's taking place here, right? I mean, the MACD has turned down, the ADX is clearly negative. So if we move to the upside, to me, that's not as powerful of a signal. And I think we can lean a little bit towards a break of the 18-week and a move to the downside based on what we're seeing here. Now, if we go to the daily, that even is more confirmed by the fact that MACD has clearly crossed through zero line, and look at what the ADX is doing. The sellers are definitely in command now, all right? And if we come through and take out this low here, I almost think you could go, I'll show you on the hourly, I think if we can take out this low, that's gonna put a lot of pressure on this 580 support, all right? So we definitely gotta keep a close eye on that. You can see what's taking place here. We had a move to the downside and we made a really nice move off the low. I mean, this is pretty strong support when you look at it here. And we're right back down to this zone of support. Now, we don't have a lot of momentum since we had this move to the downside. It's just been kind of, not really powerful in either direction. So I would kind of view this as a really strong move and then a consolidation pattern. We're still waiting for confirmation, but I think if we come back down through this low, this 585 low, again, I think there's going to be a lot of pressure put on this area down here, and I think it'll almost feel like it's water building on a dam. Now, we could come up through here. We could make another push to the upside. We could see this after failing at the 18 a couple times, hold the 18-week and make one more push to the upside. But I think it's going to be more and more narrow just based on what I'm seeing in the IWM. When you look at the Russell 2000, in fact, let's just take a quick look at the Russell 2000. Look at what has been taking place. This was a pretty harsh decline off this peak, all right? Look at the violence of this move to the downside. So it's almost like you've created some resistance up here with this king and queen bar up in this region. Let's just tell you where that is. I would say it's right around the 2350 area is where resistance is on this IWM now. So we don't have any momentum in either direction. The ADX hasn't been able to, on the weekly chart, it has not been able to cross above the 25 line, even though it's been trending to the upside. So again, that's a bit of a concern, but the bigger concern is the fact that we couldn't follow through to the point where we couldn't get that relative strength going, all right? So these are the types of factors that I'm kind of watching here, and I'm a little concerned about that broader market condition. When we look at the individual stocks, it just not, even in the large cap review that I do on the weekends for my subscribers, that list, not even the small cap list, the big cap list, other than some of the bigger names, there's definitely a lot of deterioration in groups outside of technology. Even inside of technology, there's some deterioration. But overall, just signs that we got to be a little bit more careful right now. All right, that's the update for the week. Let me know if you have any questions. Thanks.